Us through very quickly yesterday's NTB auction. We saw more than 89% of total subscription for the 364-day paper.
Yeah, so we have an NTB auction yesterday. Like you mentioned, 1 trillion was offered, and then about 1.8 trillion was the subscription, and 1.4 trillion was sold. The highlight of the auction was about 99 basis point movement of rate, especially on the longer end, from 16.35 to 17.34. Many analysts and many traders didn't expect such upward movement in yield. But again, looking at the inflation figure, which such is up slightly, it's expected that market will demand for higher yield, and that's what we saw yesterday at the auction.
Chika, I know we do have a slide that depicts this auction that happened yesterday. We saw the DMO raising more than ₦1 trillion, but again, the borrowing has been going up. But how significant is this borrowing level, especially in today's market conditions, seeing that the offer was about 50% up?
Yeah, so about 2 weeks ago, DMO raised the offer for about from 450 billion to 1 trillion, indicating that the government is looking to borrow more. And so we've seen that played out at the auction yesterday, where traders, investors demanded for higher yield. And so from the subscription, you could see that interest is there. The market itself, is quite bullish in terms of liquidity. So most of this liquidity, investors and traders obviously have to reinvest in the fixed income market, especially on the T-bill side. And so with government looking to borrow, especially with the election coming up, it's expected that the market will continue to demand for higher yield, and that's what we saw at the auction yesterday. Now, don't forget that obviously the 10% tax as well is also a factor. So all this, added together, liquidity, government looking to borrow more, tax on the T-bill side, where we continue to see that and continue to see investors demand for higher yield. This same 1 year is currently trading in the secondary market around the 17 level. So meaning that those who lost at the auction, came into the secondary market to fill in some of their demand.
Definitely, investors are cashing in on that, especially with these elevated yields that we're seeing. The more money we put in, the more money we expect to get out of it. Well, let's look outside Nigeria just very quickly to the U.S., where we saw Kevin Walsh having his first rate meeting as Fed chair. The hold stance that we saw, was that the expectation of market watchers here in Nigeria?
Well, Fed held monetary rate to 3.5%. So what that means for us is, especially the emerging market, is that it's going to it means a stronger dollar, and with stronger dollar, it's obviously going to affect capital inflow, because most investors, want to see that U.S. security, treasuries and bonds, is high. Obviously, you want to invest in such in a market, and so for most investors, people see this as a hawkish move, meaning that within the now and end of the year, we see other rates, action on the rate, and that obviously will affect what is going to happen in the markets. But for Nigerian market especially, I do not see immediate impact. I think that our market is quite lucrative for most investors, and so the short disadvantages I just mentioned will not hit our market, not for the immediate future.
I was just asking, was that the expectation of market watchers? What is the rate hold? Was that what market watchers in Nigeria were expecting to see from the Fed chair?
No. Actually, market watchers expected its hike. especially with the inflation surging up as a result of the Iraq, US, and Israeli war. So the economy has actually been affected, especially in terms of crude. So market watchers wasn't expecting rate hold. Most market watchers is actually expected a rate hike. But again, that's, like I said earlier, will not have immediate effect in our market for now.
So I just want to ask, it was clear that there's no unified front in terms of the policy direction in the U.S. We see other Fed chairs giving some kind of forecast, but the Fed, members of the Fed giving some kind of forecast, and the Fed chair not giving his own outlook or guidance on what inflation, if it's going to cut or hold rates this year. So what do you think that means, or that's signaling for us?
I think, like I said earlier, it signals a hawkish stand. That will obviously affect the direction of our own market. Most emerging markets like us will expect, a stronger dollar will expect weaker currency, which is the Nigerian currency. So for us, we also have our own issues to deal with. For the general market watchers, I think is most investors will just be on the fence, take the stand of wait and see what will happen. Don't forget that Donald Trump actually had issues with the former Fed chairman. So this guy seems to be someone he wanted. So his policy direction will obviously be in line with what the president is looking to do. And so most industry watchers and most investors will want to, keep a wait and see approach before, making any trade decision.
Definitely wait and see position or outlook for the U.S. market. Thank you so much, Chuka Nwachukwu, Chief Dealer and Group Head of Trading at UBA, for sharing your insights.
Thank you.
Now look at other markets now. Middle East markets, we see Dubai up very much in the green, over 2% at intraday.